So Roundhill Weekly Dividend ETF review, all 24 of them. Buy, sell, hold. I review them all. Hey guys, I'm Doug the Retirement Guy. Welcome back to the channel. We have not done a Roundhill in a few weeks here. So we wanted to give you a complete review of all the weekly pay ETFs and give you the good, the bad, the ugly, and see if we can help you grow your portfolio. Before we do, got to do a shout out to all of our Patreon supporters, all of our YouTube subscribers, and most definitely all of our YouTube membership members. Welcome aboard. And before we get into that, I got to say, if you're not part of the community, if you're not part of the YouTube package, don't be afraid to hit that subscribe button, hit that bell notification. You don't want to miss a single one of our episodes. All we try to do is help you grow your portfolio. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This information in the video is for educational and entertainment purposes only. If you are looking for financial advice, always contact a financial advisor. I am not a financial advisor, and I don't plan on giving financial advice. Well, let's first talk about growth. And as you've seen this past week, we've struggled a little bit. The stock market has struggled. Our portfolios have struggled. I know I've seen my portfolio struggle, but we give some positives out there. The three big ones have had some decent growth. Gold miners, GDXW, was up 6.65%. AMDW, the AMD weekly pay, is up 5.68%. And the Berkshire Hathaway BRKW was up 5.22%. Now, as I've said earlier, we've struggled. Robinhood had a horrible week, down over 19%. MSTW down 17%. Tesla down 17%. Some coin down 15%. We've had some big drop-offs. Now, I'm a more positive, outlooking type person. There's multiple ways of looking at things. And this is where the Roundhill leverage program hurts, is when you have a bad week, it's going to multiply its bad week. It's going to multiply by at least by 1.2 times the price of the share of the stock. So taking a look at that, trying to be, again, going back to what I was saying, is being positive. Is this a possible time that's pick up some great savings, like Robinhood, down at $58 a share? That is a dramatic drop. It is well below the 4-week average. You know, Robinhood's not a bad company. It's the underlying is actually very strong. Is it just a bad time of week? Maybe we should pick up some extra money and pick up some extra shares moving forward. So it just, honestly, it's not just Robinhood, it's all of them. Look at every one of the funds. Which ones do you like? Which ones are you part of? Is it time to pick up some stuff on sales, the way I look at it? So let's move on from here to the dividends. Distributions across the board were all down. We've seen this with everyone. We've seen it with YieldMax. We've seen it with Granite shares. We've seen it with Rec shares. Dividends this week definitely were down. Some big notes to talk about, though, is Robinhood was paying out 70 cents. It's the largest payout of the week, down from its $1.38 of last week. Still holding a positive distribution rate of 62.51%. At number 2, AMD Weekly, the AMDW, went from 104 down to 56 cents, but holding a 43.82% distribution rate. And then number 3, I'm sorry, I got them out of order. Number 2 is WPay, the Universal ETF. Basically stayed the same. It's technically if you're rounding error, you're at 57 cents each week, holding a 61.64% distribution rate. And that's one of those prime ones that I talked about just minutes ago. Maybe with WPay being down, I believe it was 7 percentage points, maybe WPay would be a good one to add to a portfolio if you're not invested into it accordingly. But across the board, we can see dividends took a little bit of a hit because of the way Robinhood or Roundhill handles their distribution programs. Now let's take a look at the distribution ratios. This is one of the things that I use a lot of personally in my portfolio. I do a benchmark, and it's my benchmark for me is anything that's over really 1.5 and above. I'm very, very interested in. Unfortunately for me, the round hills have never hit that benchmark. Now, your numbers may be totally different for you than it is for me, and I appreciate that and I understand that. Because I was always trying to get a maximum amount of return on my money, that get as much income as I possibly can. But the difference the way Roundhill operates things is a different from every other organization, every other ETF supplier. So we may have to adjust our numbers, or I have to adjust my numbers when we're looking at Roundhill. When we look at this, MSTR or the MSTW is still holding true at 1.41% of the dividend with only a 23-cent dividend this week. So it's a nice package with a dividend that's fallen below its average. Now, HOW, I personally own the Robinhood. It's the very first one that I purchased in this list. And it's paying a 1.20% at 70 cents. So I've seen that one a little bit higher, but I've also seen it a little bit lower. So very, very strong numbers in a bad market. Now the WPay Universal, this is one I've been watching for quite some time now. 57-cent distribution, 1.19% on an average of 62 cents. Again, it has that potential of having some solid numbers. It has that potential of just continuously paying in good times and bad times. It's going to be one that's got to be on my focus and on my radar. I don't know about you. Is it? Now let's go on to return on investment. Now, return on investment, if you don't understand that, it's basically how fast can you get your money back after you invest it. I love buying. This is the very first thing that I use on every single segment is return on investment. I want to put my money in, and I want to get my money back as quickly as I possibly can. In the weekly programs, I've always tried to keep it at 1 year and below. When we look at the Roundhill packages, there are really 3 of them that fit my classification. And again, my classification can be totally different from you. This is just my opinion on these. And the very first one is MSTR or the MSTW weekly. It comes in at 52.39 weeks. So just a hair over 1 year. And that's using the weekly average. That's not just doing what the current one is. It's using the weekly average across the board. Number 2 is ARMW. That one came in at 52 weeks and 0.78. So I'm going to round that to 53 weeks for just a hair over 1 year. And then the Robinhood fund, as I told you before, that I own it because of this number, and that is they're at 1.07 return on investment. So 55 weeks, and we'd have all the investment money back again. So you can see the trend that's happening. The Robinhoods are popping back up. The WPays are popping back up for giving you some good potential investment opportunities. So now the biggest number across the board that you really always want to focus in on, and that's the very first thing you always want to look at, is the total return. And with total return, that is your yield plus your year-to-date growth or loss to give you a total return. This gives you a real hardcore what is actually happening with your investments. So when we take a look at this one, number 1 fund is the Google, GOOW, the Google Weekly. It has a yield of 43.58%, and it's had a growth of 29.40% year to date for a total of 72.99%. Now, I do have to note all of these numbers on all the screens that you've seen are all subject to change. They were just current at the time of producing the video. The stock market turns on, they will change immediately. They'll be bouncing all over the place. So I just want to make sure everyone understands that these are just a snapshot at the minute that I made the video. Now, the Robinhood came in at number 2 at 62.51%. You see how the yield is not always the most important part. If you said that between Google and Robinhood, you would choose Robinhood. But when you look at the year-to-date growth, it's only had a 10% growth, while Google has had a 29% growth. That gives Robinhood a 72.90%. So who is better, Google or Robinhood? Technically Google. And then the third one, AMD. I've talked about this a few weeks now. I think AMD is going to be a good potential for a strong play. They have a 43.82% year-to-date yield, and they have a growth of 28.85. And I know everyone's talking about bad tech and bad AI and struggling with that, but the answer to it is it's not going to go away. They're not putting billions of dollars into something and it's just going to disappear. So that one came in at 72.68%. Notables out there, you go down the list. The number 4 would have been WPay. It only has about a 5.75% year-to-date growth loss, but a nice 61% yield. So across the board, decent returns on Roundhill. So what am I looking at this week? Here's the funny part is you're going to take 24 different funds. I don't know if you can do your research on all 24. I know I can't. I can't sit here 8 hours a day, 5 days a week, just studying funds of which one I want to invest in. It takes forever. So what I try to do is use some simple things and say, what am I going to look at this week? What am I going to dial into? And right now for total returns, it's really the top 3. It's the Google, it's the Robinhood, and it's the AMD. I look at realistically, I've told you I own the Robinhood. I don't have the Google. I don't have the AMD yet. But I'm going to evaluate those and say, hey, do I want to add that to my portfolio? And then do I want to add to my position of Robinhood? The next fund I'm going to look at is going to be the dividend ratio numbers. And again, you look at Robinhood's right in the middle, and now WPay pops on the screen, along with MSTW. And then I'll take a look at the ones that are on the return on investment, which again is MSTW, ARMW, and Robinhood pops up again. So the decision I show you is there are 5 different funds. I've taken 24 funds, broken it down to 5 funds to do heavy research. Now I can normally do that in just a few hours to really study what is the underlying asset, what is the forecast onto it, how are these going to be down the road. Will they continue their dividends? Have they had good dividends? Have they just fluctuations? These are all the things I look at across the board before I invest into my money, but these are ticket to help you, help me. Breaks it down to just 5 out of 24 different funds to look at. So guys, overall, Roundhill had a poor week in returns. Yeah, you can say a poor week in dividends, but overall, I think they're a very solid ETF on that weekly package, and been quite impressed with what they're doing so far. Hopefully this helped you. Leave us comments down below. I'd love to hear from you.
Thank you for watching.